Welcome back to my NVDA Options Double Ferris Wheel series. Last week, I bought 110 shares and sold a close to the money covered call, fully intending to accept assignment today and sell 100 of them at $180. But when I opened the options chain this morning, the premiums were just too juicy to ignore. Instead of following my own instructions and taking assignment, I rolled the call and kept the income flowing for at least another week. Sometimes the math is so compelling it changes your strategy, and today was one of those days. NVIDIA is trading at about $182 a share today, and the $180 call that I wrote last week is in the money by a little more than $2. My instructions to myself were really clear last week. Accept assignment to sell 100 shares at $180. We'll still have 160 shares remaining and lock in more than $500 gain this week. You might recall that on Friday, November 28th, I pivoted a little with this position to try to boost my returns. I bought 110 shares and wrote a covered call that was barely out of the money. I made almost $300 in options premium and set myself up for more than $200 in potential capital gains, both of which would offset the cost of adding 10 extra shares to the position. If I accept assignment to sell these 100 shares today, I'll bring in $18,000, and my average investment per share for 160 shares will be $142.36. But as I predicted, there is another choice in front of me that is really tempting. I've already decided that I am willing to sell these shares at $180. If instead of allowing them to be called away, I roll this $180 call out 7 days, let's check and see how much premium I could generate. I can bring in close to $300 by rolling this contract out 1 week. For the sake of the decision, I'm going to say I could bring in $295. That would be a really respectable 85.46% annualized return just by rolling this contract out 1 more week. And I think it's just too good to pass up. It filled at $291. I'm going to write new instructions to myself. I can roll it again for another great premium, or I can accept assignment to lock in gains if it goes in the money. This covered call is now closed. And let's take a look at the cash secured put. Last week, for a $170 cash secured put, I generated a little over $130 for a 40% annualized return. Since the share price has increased since I did that, I won't be able to generate quite as much income from rolling the put. So I'm going to look at my choices over the next 7 or 14 days. If I roll it out 7 days, I can bring in about $70. And if I roll it out 14 days, I can bring in at least $167. So $167 or $168 over 14 days is a better rate of return than $68 in 7 days. So I'm going to roll the put out 2 weeks. It filled at $172 with an annualized rate of return of 26.18% based on $17,000 of capital securing a 14-day contract. Prior to my pivot last week, I had been selling and rolling a covered call with a strike of $195. Let's see how much income I could generate with that again. A 7-day contract with a strike of $195 has a less than 9% chance of going in the money and could bring me an extra $42. If I go out to December 19th, I could bring in about $135 by selling this call. and it has about a 17% chance of going in the money. I think I'm going to go ahead and sell it just to bring in a little extra income for this position. It filled at 137. The share price at the time of setting up this contract was 182.02. So I'm going to use this number as my collateral value. I'm securing this call with 100 shares valued at 182.02. That gives me an annualized rate of return of 19.53%. And I'm going to put a reminder over here in my notes that if this one goes in the money, I want to roll it up and try to avoid assignment. Remember, my goal by selling all these options has been to pay for shares. I've already decided that I can let go of 100 of the 110 shares that I bought on November 28th, but my goal is to increase my share count from 150 to 160 while still generating income and lowering my cost basis. Let's check the total expense and income to date. Since August 1st, when I bought 150 shares, all of this is options premium until I bought 110 shares and then sold a few more contracts. My out-of-pocket cost right now is $40,180. I divide that by 260 shares, and my average cost per share is $154.54. And if I allow 100 shares to be called away at 180, this adjusted cost basis will drop even more.